Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, daily chart, and you can see the bulls had a pretty darn good week last week. You've got Monday, Tuesday, Wednesday, Thursday, Friday. And, they ended the band ride. They took out the 9-day, the 200-day exponential, 20-day simple, or the daily mid-band, 50-day exponential, 100-day exponential, and, it's been a pretty flat Sunday into Monday. You can really feel this thing kind of taking a breath. But now, we talked about these mid-October resistance areas last week, around 44.30, etc. We trade as high as 43.91. This is where we're going. This is where we're going, unless the bears do something about it. So we're in that mode now. We are going up in a vacuum unless the bears do something about it. So there wasn't anything particularly bullish about this pop versus any other pop until it started taking out big areas like, the 200 daily mid-band. So you've got a shorter-term tape control area, a long-term tape control area, and both of which on Wednesday got blasted through like they weren't even there. And then, on Thursday like they weren't even there. And then the Friday, all it did was follow through. So Friday was a day where, okay, bring it back down, test it, see if you can close below. Nope, they just took them straight up. It made a bad situation for the bears even worse as you take out the 50 and the 100. And you press back into here. If you convert this area into support, then you have to start looking at the upper band. Lower band, middle band, upper band. Okay? I get it that there's inflation. I get it that there's geopolitical stuff everywhere. I get it that, Barron's or Market Watch or all this crap is talking about a lot of very logical reasons why the market should not be going up. Price doesn't care right now. So you can be long, you can stand aside, or you can lose money every day. You can be long, you can stand aside, or you can lose money every day. That's where we are. Eventually this thing will stop. But throwing darts at every little high, saying this is it, and then, just going back and doing it again, as Lucy pulls the football there, Charlie Brown, and you end up on your backside, is not a way to grow your account. So we talk about this every day in these down markets. You can be long. You can stand aside. Don't fight it short. And I guarantee you, a truckload of people were fighting this short last week, which is why we ended up doing this. Because it's just covering and puking and covering and puking. Although I must say, as you got into Friday, there was what felt like some genuine buying coming in. Because, eventually genuine longs have got to get on the train because it's not just some reactive thing off of a lower band ride. So, hourly chart. Start talking about today. So we're just kind of riding, this is the 50-day simple. We're just kind of riding this 50-day simple, and we have been since yesterday, Friday afternoon. So really flat. You can see how tight these bands are. The market is basically asleep right now. That tells me at some point this morning we're going to get a move. Well, is it up or down? I don't know. Neither does anybody else. If it's up, you want to buy it. If it's down, you want to short it. So if you are one sec. Okay. And through the magic of television, we have the new weekly pivot, 4304.58. So what I was going to say was, if it's a down move, you got to get down. Weekly pivot is locked up here with the 20-day simple, with the daily mid-band. So, what is the task for the bears? Not only today but this week, you have got to get back and start closing below these areas. Weekly pivot, 20-day. Ideally, you take out the monthly and the 9-day. What you could see is at some point this week us chopping in this area of price. It's just markets love to hang out between the monthly pivot and the weekly pivot, especially when you get the 9-day, and they love hanging out between the 9-day and the 20-day. So it's all kind of set up. Problem is, we're way up here. The alternative is, if it wants to go up, then it's going to have to deal with 4,400. That could be a battle. round numbers usually are. You got volume weighted average price in the hourly mid-band checking in at 43.81. Proprietary moving average is 43.83. So, and you have some very tight bands. So there's going to be some kind of a resolution. They're too tight for the resolution to not be today, so you're going to get a resolution today. But I cannot emphasize enough about not guessing which way, and I'm using that word very specifically because that's exactly what it is, guessing which way it's going to resolve versus letting it resolve, understanding where your risk is, and then riding it up or riding it down. There's more handle potential to the downside simply because I think it has to retrace a little bit and reach back towards some key areas. Whereas the upside, I mean, we've been going up for 5 sessions now, going on 6. It needs a break. That doesn't mean the break has to come today. It doesn't mean the break, and when I say it needs a break, that doesn't mean it has to come in. You can just keep doing this and drive everybody absolutely batshit crazy up around the round number. People will overtrade, do this, do that, get frustrated, and then when they've thrown in the towel and they just can't look at it anymore, then it'll move. So be aware of that. We've gone up a long way, and the market has earned a little bit of a rest. That said, it doesn't look too much different than what we were doing coming into Friday. But, we did have a jobs report in here. All right, that's all I got. Have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to everybody tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.